Good morning, everybody. It is November 10th, 2023, 8:45 a.m. You are back with me on another Market Open. It's Friday, folks. We got to Friday. It's been a hell of a week. It's been a long-ass week. This week has been pretty long. I mean, Friday got here pretty quick, but it was November 6th, 5 days ago, and now it's November 10th. Which is kind of crazy. We're here. It is November 10th. We got 3 weeks left of November. We are here on this beautiful Friday morning. It is a little cold in New Jersey. What's the temperature in New Jersey? Right now it's raining. And Siri, what's the weather? 48. Okay, I was afraid she was going to be like, I do not know. I have to search the web to find out the weather, but she's at least useful for that. So it's 48 degrees in New Jersey. A little rainy outside. We've got some interesting things to cover today in the Market Open. We got Anthony Noto, CEO of Sofi Technologies, shut my ass up yesterday and bought 44,000 shares in the open market. So we're going to be talking about that. We're going to be talking about Robinhood going under $8, was a $6.8 billion market cap, basically trading at cash at this point. I mean, it was just honestly incredible the price it got to, and some analysis from some people that think Robinhood's a very good long-term hold and that this bad boy is going to 20. So we're going to be talking a little bit more about that. And then we got to talk some macro stuff. Biden and Xi Jinping from China are meeting on San Francisco on Wednesday. So the president of the United States of America will be meeting with China. Tensions with China are not the best right now for a couple of reasons. Number one, China's been supporting some of the issues in the Middle East that the United States doesn't really want them to be supporting. Number two, they've openly claimed that they are going to invade Taiwan in 2027. Number three, Biden banned a bunch of chips from being sold into China from companies like NVIDIA and AMD. So China got kind of upset of that. We've seen all the issues with Apple going on in China. So tensions are not the best with China. It's not like we're in a trade war like in 2018, but we're definitely not in the best situation. And so this meeting is probably needed, but not sure if any negotiations will come from that meeting or anything will be necessarily productive. Nonetheless, we got a lot to talk about, a lot to get into on the Market Open. Robert Sanchez, good morning from Texas. Robert, thank you for being here. Midwest, Broccoli Bob, Laura, Mark Stang, Imnop, Freddie. Good morning, brother, from another mother. Good morning, Freddie. Thank you for being here. Your last name is Laffitite, and it reminds me of Laffy Taffy. Remember that candy? I used to eat those when I was little. Thank you for being here. Sethi Roth, Philip Rizzo, Laura Nicole, SP Narwhal, Garcia, my guy, Max Deuce, Invisible Voices, Jay Santiago, Felicia. I see you, Sofi, tempting. It is. I bought a little Sofi yesterday. It got it tempting. Those prices got cheap. Engineer, Daphne, Joseph Villegas, Laura Nicole, 45 degrees in Northern California. Yeah, Northern Cali is always colder, even though it's still California, so it's not supposed to be. Jay Santiago, Ray, having a muffin and coffee. I hope you're enjoying it. Kelly, hello. Good morning to you. I hope you're having a beautiful day. Levi Vargas, Kaser, Marvin, Troy, what's up, Amit? Troy Clements, what's up? All right, let's get into it. Let's start off with the first news of the day, which is Noto. I think we should start off with our guy, Mr. Anthony Noto. Look, I have some mixed feelings on how he purchased his insider, or how he did his shares, how he bought his stock, because it kind of felt like a sympathy play, in my opinion. Okay, this is what Noto ended up doing. So if you're just tuning in, CEO Anthony Noto bought 44,000 shares of Sofi at $6.77, spent about $300,000. Look, it felt like a sympathy buy because the stock was dropping dramatically. And the reason I'm saying this, I'm not saying it's a bad thing that he did a sympathy buy. I mean, like, he did what he had to do. He's the CEO. I wish, Karp and other people would do stuff like this. Now, granted, Palantir's been doing really well, so they don't need to. But when Palantir was $6-7, I mean, we were begging for Karp and company to buy shares, and they didn't do it. They ended up just performing as a company, and, AI kind of really helped them get out of that situation. But Noto's in a tough spot. Rising delinquencies, fears of a recession, deposit growth might not come down. None of that stuff is happening as per their Q3 earnings, but the fear that it will happen in the future is what's really spooking the markets. On top of that, the CRO, the CMO selling off 50 and 33% of their stake. Chris Lapointe, the CFO, who's also an avid proponent of Sofi. He's very public out there. He bought 14,000 shares, and then Noto bought 44,000 shares. I think both of them got together when they saw the stock dropping as dramatically as they did, because this wasn't scheduled. This wasn't planned. This wasn't a 10-1-5B. This was like, I think they were like eating a donut, drinking some coffee on a Thursday morning. They opened up my market open, or they just looked at the stock price. They saw me complaining that SoFi was at 680 for no reason. And they were like, you know what? This is not going to be good, because Amit's over here yapping his mouth, talking about all these insiders selling, and he's getting people upset. He's calling us just a bank, which that's how they're being valued right now, just a bank. And maybe I think they decided, you know what, we got to buy some shares. So it's a good thing that they bought some shares. Really good for shareholders. I think a lot of the market felt a little bit more calm knowing that Noto bought. Again, I think Noto's in a really interesting situation. He cannot sell shares anymore. Until the stock 3-4x's, whatever, gets to $20, I would think is like a minimum where like shareholders would be okay with him selling. He's bought every time the stock's gone down as a sign of support. And now if he were to sell at $7-8, I mean, I think everyone would lose confidence. And it's just the nature of one of these companies that was at one point $30. Chamath SPAC, made a lot of retail people lose money. Thankfully, I didn't know about this shit when it was, a Chamath SPAC. I found out about it when it was $4. And so, it's one of those companies where Noto has to do what he has to do. It's good leadership. He bought some shares. I think it's going to help the company writ large. CFO Chris Lapointe bought some shares. Today, it's going to be really interesting to see how the market reacts, because it was down 10%. It ended up being down only 6%. It's up 691 in the pre-markets right now. I did not sell a single share. I bought a couple more options yesterday. They got really cheap. Still obviously long, bullish SoFi, right? That earnings was phenomenal. But I do know people that were selling yesterday because they didn't like the insider selling. I didn't like the insider selling. It wasn't enough for me to sell the stock. I was like, look, it's annoying. And maybe, I don't know, maybe you talk about it and the other insiders are finally like, all right, let's sell some shares. But we'll end up seeing kind of how it plays out and what ends up happening. Big dumps of SoFi in level 2. Yeah, there was a lot of people dumping yesterday. I mean, and I don't know if it's retail or institutional, but a lot of people did not enjoy the price action on SoFi. Noto's going to be the biggest bag holder. Dude, if Noto's holding the bag, then all of us are holding the bag. And look, there is a level of shareholder alignment there between Anthony Noto and all of us that I think is very nice, and I like seeing that. But I did not like seeing the stock price go to 670 yesterday for no reason, right? It's like you start to ask yourself why. In a day when the market was pretty green, I mean, granted, it turned really red, but you've got companies doing decently well. You don't want to see your stock that has a triple beat, just like all confidence is lost at that point, right? And this is the nature of holding stocks. This stuff happens, right? So you got to be able to deal with it. But Noto's done a really good job just coming in, being Batman and saying, hey, I'll buy some stock. Yeah, I'm not losing faith in the company at all, and we're going to be okay. Having said that, let's talk about Robinhood, okay? So SoFi yesterday went down pretty dramatically, $6.70 at one point. Robinhood got to below a market cap of $7 billion, right? So it was basically $6.87 billion. Robinhood went down dramatically as well. So Robinhood is down 20% in the past month. Kathy Wood did not buy any Robinhood yesterday. 2 days ago, she bought 1 million shares. The interesting thing about Hood falling down is I think you saw a lot of the market get scared around what is the potential of Hood. And Arnie put it best on Twitter yesterday. The Hood fear is kind of like peak fear that we saw in the context of Robinhood. We got some news right here. Robinhood CEO sold shares worth $800,000 according to a recent SEC filing. So again, Vlad sold some shares yesterday. This is breaking news to me. The reason it's not the biggest deal in the world to me is because it's probably not 50 or 33% of his entire stake, right? And that's why, that's the reason I got mad at the SoFi stuff. The Robinhood people, anyone selling their shares, even when Karp sold shares, I don't like it, but it's not 50% of his shares. What got me upset about SoFi is when a C-suite is getting rid of half their position at this price. Like, I think Vlad sold shares 2 weeks ago, right? It's like, to me, I don't care that much about that because this guy has millions and millions of shares, right? 800,000, that means what? Maybe 100,000 shares? That's probably a drop in the bucket in the over. Like Karp, for example, people say, like, why don't you get Karp? Karp has 60 million Palantir shares. Like, there's a reason I don't get that upset if he sells 100,000 shares. Like, the dude has he has like 4% of the company. He has a lot of shares. So it doesn't upset me that much. It's when people sell the entire position where you're like, hold on, what's going on? Or like it's like, imagine Karp sold 30 million shares. I would be concerned, right? If Vlad sells 70, 50% of his portfolio of his Robinhood stock, I would be concerned. But nonetheless, Robinhood right here at $8.04, up 1.32%. It was down 5% yesterday. The interesting thing about Robinhood as well is that right here on Webull, you can see the market cap is $6.86 billion. They have $5 billion in cash, which means at this point you're paying $1.8 billion for the brokerage. And the question becomes, is the brokerage worth $1.8 billion? I think Robinhood at $7 is similar to Palantir at $6. I think this company is going to go down. I think this is going to be peak fear. We were stuck in this level all of 2022. All of 2022. And as soon as we got some momentum, the thing spiked right back up to $13, right? It was a nice swing for those that had it at that level. So I just don't think that it's going to be at the same place. This is what Robinhood tweeted yesterday. So this is their tweet. Any old TD Ameritrade customers looking for something smoother, move your brokerage account over to Robinhood and get a 1% bonus. And they use this meme, this King of the Hill, King of Queens meme that you guys have probably seen. And they put Robinhood's face on top of it. And I said, when the stock drops 20% in a month, the meme interns are the only ones left to save the company. So they brought up the meme interns. And Robinhood doesn't do memes that often. So it's funny that they put this meme. Now, this is really interesting, though. They are offering you 1% on moving as much money as you can into the portfolio. I looked at it last night. So they were like, look, if you have $1 million, if you have 100,000, we don't care how much money you have for like the next, I think they're doing this for the next 3 weeks. No matter what money you bring to the portfolio, we will give you 1%. And I was like, that's interesting. So if you're a brokerage at TD Ameritrade or Thinkorswim, you're probably not going to trade over to Robinhood because it's not the target demographic. But if they did, if you have $5-6 million and you transition over, you have 1% on top of that. That's not bad. That's not bad at all. So, Robinhood's doing what they're trying to do to be able to get some more momentum, but they're definitely trying to get more deposits to increase, and their deposits are already doing well. But again, I think at these levels, Robinhood is stupid. And when prices get stupid, that's when things get really exciting. Like really, really exciting. You want to buy Robinhood not at $9, $10. You want to buy, if you believe in it, right? If you believe in it, you want to buy it at $7, $6, $8, not at $9, $10. Because, there's just probably more opportunity in the future for upside if it runs to $10 and you got it at 7. So we'll see how the market treats Robinhood. We'll see how the market treats Sofi. We'll see how the market treats a lot of things going into the rest of the day. Let's get into some macro. And see what we have going on. We had some interesting articles drop on Palantir yesterday that I'll probably talk about in the daily Palantir episode. And also, we'll probably reference on today's show 2 articles. One is about the war in Ukraine and how Ukraine is using AI. Another article from Time that dropped that Palantir is mentioned in. Palantir tweeted it off their official account. And so it seems like, they're pretty excited about what's going on in the macro and what's going on in Ukraine and, how they're ultimately helping. And then another article done by The Atlantic was an entire profile with Peter Thiel, who apparently is not supporting Donald Trump anymore and is leaving politics. I didn't get to read the entire thing, but I saw it last night. I guess Peter Thiel is done with the political atmosphere. He's not happy engaging in politics, and he's very reclusive from doing interviews, but he gave a lot of interviews to this Atlantic journalist, and now he's done. So we're going to be talking about that as well and seeing why Peter is getting out of the political world as well. Okay, macro. Let's go to the 10-year. 10-year Treasury. We did have Jerome Powell talk yesterday, so I want to talk about that. 10-year continuing to come down. 4.573% on the 10-year, down 0.057%. It's dropping 500 basis points since the past 2 weeks. You're going to get the market to be excited when you drop 500 basis points on that 10-year. S&P 500 right now, which took a little bit of a beating yesterday at 435. It was at 438 at the peak, went down to 433, now up 0.44%. That 10-year keeps coming down. The market's going to be excited. Even Palantir, 1830 in the pre-markets, it was down to 1801. It's up at, SoFi's up, Zoom is up, Robinhood's up, Amazon's up, Apple's up, Microsoft's up. Microsoft at 361, Apple at 183. We're seeing a lot of companies benefit. When that 10-year comes down, the entire market, look at Uber. Uber is finally above 50. It's been below 50 for so long at that 47 level. The market gets excited, right? Why is that 10-year coming down? The market feels inflation is coming down. Jerome Powell yesterday gave a speech at the IMF. He was interrupted by some climate change protesters, and he ended up cursing them out. He said, just close the effing door, which was hilarious to see him say that. But on top of that, he was still trying to be as hawkish as he could. And the reason the market tanked yesterday, for those that are wondering why their stocks fell after hours and things of that nature, is because Jerome Powell does not like seeing the 10-year come down 500 basis points. To him, that's basically a sign of euphoria from the market. And he does not want to see that sign of euphoria, which is why he said inflation is still above expectations and it's going to be very hard to get inflation to come down. maybe it is going to be really hard to get inflation to come down. We're seeing gas come down pretty dramatically as well. So I don't know, man. It's like this idea that he's so concerned about, inflation's going to be tough to get down. It's still above levels. Like, yeah, it's above your 2% target, but I think it's coming down. And I think he wanted to get the market to be like, don't buy stocks. You should still be afraid. You should sell off the bonds. You raise the yield a little bit. Let's get some more chaos going on. And the market's not having it. The market we're a month and a half away from the end of the year. The market's like, maybe we're going to get Santa Claus to come to town. We're not going to just be so afraid of you anymore, Mr. Powell. And he's trying to do a little bit of the opposite. David says, don't get too complacent with Palantir still at 18s. The stock name will be taken to the woodshed after the hype and euphoria dies down. Maybe, maybe not. I could see both sides. And yesterday, my Palantir Daily episode, I did the $10 sell rating, the 21. So I talked about this entire week. I talked about $21 price target, the $10 price target, and the $21 price target from Bank of America, HSBC, and Citibank. All of them, I think, have pretty valid points, except there was only one part of the $10 sell rating. I was like, this is kind of dumb. I don't know why he's saying that. But outside of that, he does have some good arguments for why the stock could come down. So look, I'm with you on the objective side that it is high right now, but I'm also with my bulls, which is where my heart is, that some of these stocks stay overvalued and like 40 billion maybe gets normalized in the ecosystem with Snowflake, Datadog, Databricks on the market. It's like, 40 billion. It's not that crazy. We'll give Palantir 40. Go ahead, Palantir. You can stay at $18. It's been here for almost 3 weeks now. So we'll see. The only time it went down from 18 to 15 was that 1 week right before earnings went to 1480. It's at 1834. I mean, we'll see. I especially if we get a full market rally, S&P to 460, it's going to be hard to get Palantir down from 18. Maybe it doesn't go to 20. Maybe it stays stuck at 18, 19, but it's going to be hard for it to come down if the market does end up going down a little bit throughout the end of the year or early next year. Then yeah, we could see Palantir come down a little bit. So we'll see. We will see what ends up happening with Palantir. Trade Desk yesterday. This one I think went down. Correct? Yeah. Oh wow. Okay, it's down 22%. Let's transition to Trade Desk. I didn't even know it was down 22%. Let's talk about this one. This one is definitely hurting Meet Kevin's PP. He's got a lot of this one. Let's pull up Trade Desk earnings. What happened here? I think there was some qualitative analysis where people were very excited about Trade Desk in terms of the different deals that are going on for digital advertising. But overall, it seems like they were not the best. Here we go. Trade Desk plunges 30% on weak guidance tied to auto Hollywood strikes. Okay. So let's see. Earnings per share, 33 cents versus 29 cents. So they beat on EPS. Revenue, 493 versus 487. So they beat by 6 million on revenue. For the December period, Trade Desk projected revenue of at least 580 million, trailing the 610 million. So they're down 30 million from projections. And that's what got the street a little upset. Let's see what they're blaming. The United Auto Workers launched targeted strikes at select facilities against the Detroit automakers beginning September 15th. Blah, 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 blah. Separately, Hollywood actors initiated a strong stoppage in mid-July and just came to an agreement with studios this week. Jeff Green, the CEO, said on the earnings call that starting about the second week of October, we began to see some transitory cautiousness around certain advertisers. So that's really interesting because Trade Desk is involved within the digital advertising ecosystem, and they're really like just phenomenal at targeting advertising. When the automotive strikes and the actor worker strike started, they saw companies take back their ad spend. And so that's what they're blaming it on. That's weird because Facebook and Google didn't blame anything on the strikes. Now, I know Facebook and Google are totally different in regards to advertising, but it's still in the same niche. It's weird that they're, let's see this here. We saw some reduction in brand spend in verticals such as automotive and consumer electronics, for instance, specifically around cell phones and media and entertainment. Some of these industries have been recently impacted by the strike, such as the U.S. auto industry. See, that's weird though, because if there's decrease in brand spend, why is Meta beating earnings by $2 billion? Why is Google up 11% year over year in search ads? That seems like that's more of a structural problem with TDD as a business, which is fine. It's not Google or Meta. It's not supposed to have the level of security that those companies have. But I guess they are more susceptible to people not advertising as much as normal. We got to talk about Unity as well. We'll talk about Unity in a second. Trade Desk technology helps brands reach relevant potential customers across the internet and has flourished in the world of streaming and online video. While most independent ad tech companies have struggled to compete with Google, Trade Desk has built a business valued at $38 billion, led by largely helping companies shift ad budgets from traditional TV to the connected TV market. All right, well, if you've got TTD, maybe this is a dip worth buying. They are definitely susceptible to strikes and issues in the advertising space. I don't have this stock. Market cap of 37 billion is probably going to open at a market cap of like 32, 33 billion. down to $60, down 21%. How's it performing for the year? Trade Desk was at 114 at the peak in 2021. It got to $39 July 2022. And then 2023, beginning of the year, was at $50. So it's at $60 now. So you're up $10 if you bought it in January 2023. If you got it in those July lows of 2022, then you'd be up a little bit more. So that's Trade Desk. Let's go on to Unity. Let's talk about Unity a little bit more and see what's going on with them. So Unity is a company we've been talking about since it was $24. Now it's at $22. We saw the run up on the Apple event back to $50 when they announced the Vision Pro announcement. And then everything went to shit for Unity. Why did everything go to shit for Unity? Well, let's just say Unity's CEO had zero unity with their developers. Okay, the guy basically said, if you're going to start developing on our platform, we're going to charge you fees. If you get a certain number of installs, you're going to have to pay per every install extra. Just these horrible ideas that seem to be unilateral from the CEO himself. And then we found out the CEO's history is just not a good guy. He didn't really do that good. He didn't treat his workers that right in his previous company. And it was pretty bad. Unity now doing layoffs as well to be able to cope with all the problems that are going on. Valero, hello. Thank you for being here in the chat. And we're seeing some broader issues with revenue and guidance. So loss of 32 cents a share. That's where their earnings. Revenue 544 million versus 553. So they lost on EPS and revenue. Company's revenue grew about 69% year over year, mainly thanks to the $2.9 billion acquisition of mobile advertising company ironSource, according to a regulatory filing. The $124 million net loss narrowed from $250 million in the year ago quarter. So revenue is up 70% year over year. A lot of that revenue seems to be from their acquisition they made, which is good. But nonetheless, they are growing decently well. Our results in the third quarter were mixed, Unity said in shareholders. While revenue came within guidance, we believe we can do better. In September, Unity announced new fees. This is what pissed a lot of people off. They got rid of the entire CEO. While we did not expect the introduction of the fees to be easy, the execution created friction with our customers and near-term headwinds. We expect the impact of this business model change to have minimal benefit in 2024 and ramp up from there as customers adopt our new releases. Unity is down 11% today in the pre-market. They were down 3% yesterday. I think the large reason for why Unity is down, remember the moat around Unity is that they're one of two companies along with Unreal Engine that are in the development space for gaming. So when it comes to AI, 3D, VR, AR, all of that type of developmental stuff, Unity is one of the only companies in the world that really is able to do it in an effective way. I mean, they're teaching Unity courses in college classes in those degrees. So if you're trying to become a gamer or a gaming developer, you have to learn the language of Unity to even be able to have a chance to survive in the industry and to become professional. So Unity right now at $22. I think the reason they're down is because shareholders do not see a clear path for how they're managing the business. Now, granted, this is an exciting dip in my opinion. Market cap at 9.68 billion. They're close to profitability, $22. Street sold them off because the street sold them off. There's some companies like Unity, Robinhood, etc., that are like, do they have a moat and do they have a really sticky user base and will they be able to navigate everything going on? If some of those answers to those questions are yes, you start looking at them like maybe there's something here that I should pay attention to. I don't know video games that well. I suck at video games. Like, I was not the typical teenage boy. I think I got a PlayStation 2 when I was like 10 years old, and I tried to get into video games. I played Grand Theft Auto. By the way, Grand Theft Auto 6 is coming out. That's going to go crazy in the gaming world. So I remember I played Grand Theft Auto, and I just I liked it. It was fun, but I never got into video games. I never got into Call of Duty. I never got into first-person shooter. I just never was into it. That's why I can't invest in Unity or some of these video game companies, because I just don't care about video games. If I really wanted to do the DD and maybe get more excited about video games, I could, but I can't hold on to this because I don't believe in video games. I don't play them. I just never was into them, right? And if I have kids one day, I'm not going to have them play video games. I want them to do other stuff. Video games to me is just to me, it's not exciting, right? Now, granted, I like debate. People might not like debate, right? I was debating in high school. People were playing video games in high school. People were like, oh, debate is stupid. So everyone has different interests. But video games to me as a broad sector to bet on has never been interesting, even though I've seen the growth of Twitch and streaming and all that stuff in regards to video games. So if you do like video games, if you do see the market, if you do have personal experience with it, if you do see where the future of video games are going and how people are in that world so deeply, and obviously if the Vision Pro transforms the fundamental nature of how we think of video games, I think Unity is one of the only players in the stock market that has a chance to really take over that market. So it's just a question of how much you believe in video games and where video games are going to go. Video games is a right, Amit. Don't do that to your kids. Dude, I just don't want them to be obsessed with looking at a screen and pressing buttons. Now, granted, by the time I have kids, they're probably going to be doing something way different than what I was doing. But yeah, I just never got into them. Never got into them. GTA 6 will release in maybe 5 years from now. In December, our first trailer will come out and out a lot more. GTA 6, the tweet from Rockstar Games that makes GTA 6 that put out the tweet that GTA 6 is coming, got 25 million views. 25 million views. People were really excited about GTA. I mean, people want that game back. I mean, put in the chat if you used to play that game. I played GTA Vice City on the PSP. I didn't even do any of the missions though. I didn't ever beat the game. I just like went around and, like did what people do on GTA, which is like act obnoxious. But so like it was fun at the time, but I never got super, super interested in it. Josh says being obsessed with the screen and pressing buttons is literally the life of every white collar worker. Yeah, that's true. I mean, yeah, that's basically that's what corporate America is, except you're pressing buttons and making some money. He says that while sitting in front of a screen and press. Okay, yes, that's true. Twitter is basically just pressing buttons. I get it. I understand. I just creating content is different than video games. You know what I mean? GTA San Andreas. I remember this one. Vice City was my shit. Yep, I love Vice City. Fallout New Vegas. Yep. Don't like video games. I have 2 Xboxes now. Erwin, good morning. Yeah, I was just never into video games. Just never into it. And I just couldn't imagine now at this point in my life setting up a video game. Like Chris the other day, he was like, "Oh, I want to play this video." I'm like, "Chris, you have time to play a video game, bro? You have time to sit there and play a game? Like it's like I play chess. Maybe that's one thing I play. I have that on my phone. Live chess. I play chess. I get my ass kicked every day by some random person across the world. But I play chess, and like I'll play maybe 1 or 2 games a day, just like when I have a couple of minutes. I enjoy playing chess, but outside of that, I don't play anything too much. Let's get an update on the Fed and raising rates since we were just talking about the macro. We talked about TTD, Robinhood, Anthony Noto, Unity. Let's get an update on if the Fed is officially done raising rates.
10 in a row, Josh, on the NASDAQ. Why don't you address this question? How much has the landscape really improved for stocks?
I think mainly what's improved is sentiment. I really don't think the landscape has changed much at all. Most of us understood that the last rate hike was either going to be the last or second to last. I don't think anyone outside of maybe a wild guess would have said, yeah, we're going to keep hiking into 24. So if that's what we're hanging the recent rally on, the end of rate hikes, well, that's been a known probably since, I don't know, July or August. Sentiment is different. Sentiment has greatly changed. And one of the things that we've been talking about since the beginning of September is, will there be a performance chase? Will there be a year-end rally? And typically, when you have gains like the ones we've seen, specifically in the NASDAQ this year, that's exactly how the final 2 months of the year shape up. So I'm glad it's happening. I don't think it has anything to do with fundamentals at all. But sometimes that's all that counts. People feel better. They're putting money to work. They're not obsessing over money market rates for a change. We'll see how long that lasts.
Steph, you want to take issue with that?
Yes, I think a lot of it has to do with better fundamentals. We've talked about the economy hanging in there, running at about 2.5%. And we got great job number again today. Initial claims is now running 4-week moving average at 210,000, and it has been in that range for the last 7 weeks. So the job market is holding in. That is helping the consumer. Remember, retail sales last month were actually much better than expected, that everybody has forgotten about. Manufacturing, there are pockets in the manufacturing segment, aviation, onshoring, supply chain rebuilds. Those are all humming, and that's helping the economy as well. And now you have the end of destocking, and that's going to help GDP as well. So GDP is better, growth is better. We're making progress on inflation, whatever metric you want to look at, PCE, CPI, unit labor cost, productivity, all of those things are showing better inflation trends. Not to where the Fed wants it to go, but certainly making progress. And to the Fed, I think they now sound a little bit more realistic about what's going on. And so I do think as a result, we've seen the peak in rates. Maybe they stay higher for longer. We've been talking about that for over a year. That's okay because the economy actually can handle it, growing at 2.5%. And by the way, earnings are coming in better than expected and revisions are higher. So to me, you add it all up. And yeah, of course, a part is sentiment, but a lot of it is fundamentals. We're doing better than what people expected.
If that's true, why are small caps doing so poorly, for one thing? And then Barkin today from the Fed.
This is a good point. I mean, he brings up why are small caps not performing the way that the Russell should be performing way better than it's performing right now if all the things Stephanie mentioned are correct.
We're going to have more on the Fed in just a moment, by the way. Anecdotes suggest the economy could be weaker than the data suggests. That's Barkin from the Fed.
I think small caps, a lot of the companies have high debt loads. And as a result, with higher interest rates, that's going to be a headwind. I think that's a big problem with it. I'm not a small cap investor. I don't think that the transparency is nearly as good as mid cap and large cap companies. So yeah, I'm watching it for sure. But I'm looking at other things like industrials doing pretty good. Energy today finally is catching a bid. Financials have at least stabilized. Are any of these as attractive as technology? No. However, we are seeing a bit of a broadening out. And so maybe just go own more technology, which is exactly what I've been doing.
I mean, because in energy, for example, it's down 5.5% in a week. I mean, catching a bid is being a little generous because I mean,
today
the sector's flat.
Yeah,
well, yeah.
No.
Well, I mean,
So from her perspective, right? CPI is going to be fine. PPI is coming down. We're getting things in the right direction. Inflation's coming down to the right point. The question simply becomes, when is the market going to take all that information into concern or into calculation and then decide to do something in regards to some of these small caps? Small caps, I don't even know what the full definition of a small cap is. Is it below 10 billion, 15 billion in market cap? I feel like it's definitely below like a certain threshold. But the Russell, which is the index, Russell 2000 for all these small caps, hasn't performed the way the NASDAQ and the S&P has performed. Again, the S&P 500 at 435 in the pre-market. It was at 410 just a couple of, not even a week ago. Last week. It was on Monday last week. It was like really scary, where it was going. And NASDAQ right here, 13,500. It was at 12,500 on October 31st, 11 days ago. So we've seen some of the larger indices kind of deal with the pressure and recover and have a nice V-shaped recovery. Russell 2000, we have not. Her argument about some of those companies have a lot of debt, I can understand that. I guess that's a concern that a lot of those companies have a lot of debt. But in general, if we're having a real end of year rally, everything's supposed to go up. And it is weird that those companies aren't going up right now. Bitcoin, let's get an update on that. This bad boy has been doing pretty well. Where is Bitcoin? Whenever BTC, there we go. Okay. 37 grand. There you go, folks. It was at 38 grand yesterday, or 37,989. So it was basically at that level. Fell right back down to 36. So went down 5%. And now it's right back up to 37. The move in Bitcoin has been quite spectacular. I mean, within a couple weeks, we saw it go from 26,000 up to 37,000. And it's here. And it's affected a lot of these crypto companies that are benefiting from the Bitcoin rate going up higher and higher. And so, a lot of those companies benefiting. Coinbase is benefiting as well. Up another 2%, $94. Now Coinbase hasn't seen 100 in a little bit. Riot, another Bitcoin company, up 1%. Marathon, we're seeing that one's up again, up 2%. These are off of days of like 5-10% already. What's another one? Clean Spark. Let's go to these guys. These guys are up as well, up 2.44%. So it's really exciting. But see, CleanSpark, it was down 5% yesterday, even though it opened like up 11%. And it went down because Bitcoin went down 5%. So this is the nature of the volatility you have to deal with when you're investing in crypto. A lot of these bad boys just come down, even though they come up intraday because of how it happens. I mean, you should look at Ethereum. That's what made the biggest move recently. Yeah, and we were talking about this on Finance Junkies yesterday. The reason Ethereum likely moves a little bit higher than Bitcoin, look at that. Now it's at 2,000. It's at 2,100. Is because so many people think Bitcoin's so expensive that they just pile into Ethereum because it seems like a cheaper coin, right? At 1,800, 1,700. Like, I can afford an ETH, but I can't afford a Bitcoin, right? So that's where the money kind of compiles and compounds into the separate crypto. And so, that's where you get it at 2,079. You get it at a high level as well. So Ethereum's up just like Bitcoin. Solana's up. I have a friend, I think I told you guys about this. He put in 30 grand in Solana. I don't know why Weeble's not showing it, but let me look at the price here. He put in 30 grand at 31 bucks. Solana. Right now, Solana is at 50, but he sold it at like 43. Because that was going to be a swing, 41 to 43. If he had just held, he was texting me this morning. If he had just held the fucking 30 grand, he would be up 10 grand in literally 3 days. I mean, that's crazy, bro. Like, this is the nature of crypto. He would have been up like 10 grand in a couple. I should have followed him into that. I'd be like, so should I put 30 grand into Solana? But I'm too much of a chicken to do that, bro. If I can't buy Bitcoin, there's no way I would have bought Solana. What does Solana even sound like, bro? Solana sounds like a fish. Like, oh, honey, do you want to have some Solana tonight? Some fried Solana? Like, we'll have it. Like, we'll have some Solana and broccoli. That's what Solana sounds like. Or it sounds like a girl's name, Solana. Sounds like a foreign name. Nonetheless, He would have been up a lot of money if he had held that stock or held that crypto. The BlackRock ETF rumors. I mean, yeah, that's also there. The BlackRock ETH ETF rumors, that's also there. But there is also some truth to people wanting to buy a cheaper crypto, right? Which is why they look at Ethereum versus Bitcoin. But yeah, I agree. I mean, the BlackRock ETH ETF rumors, that is something we talked about Financial Junkies yesterday. That's also another reason for why Ethereum went up a little bit more as well. Solana sounds like a cold cut. That's also true. Yes, the BlackRock ETF for Ethereum is also letting it go up as well. BlackRock's trying to get their money out of crypto. They're trying to get their money as well, whether it's the spot ETF on Bitcoin or whether it's this new ETH ETF. Eventually, when these get approved, I mean, we'll probably see some more rallying in the crypto markets. And so that'll be well. A lot of people saying, Amit, when are you going to buy crypto? It's not really about buying crypto. Like I don't even have that much money to put into crypto. So I don't know why people, like, should I just put $100 and get people excited? It's like, I like owning real companies. I can sleep better at night knowing I have a real company. That's just who I am, right? And I don't have that much money to put into crypto as well right now. So even if I did have a ton of cash, it wouldn't be a huge allocation from my perspective. But I'm very happy for the people that are making money in crypto, and I'm happy for crypto going up because that helps all of fintech, because all of fintech in some way, whether it's SoFi, PayPal, Robinhood, et cetera, are integrated within the crypto ecosystem, and that helps them. It helps Robinhood, right? So definitely really important. Sam says her Solana average is 80. Yeah, I remember when Solana in 2021 hit 240, and I had a friend who was buying the crap out of it, and he was publicly tweeting about how it's going to make him a millionaire. Dude, that tweet did not age right. I mean, that's how you knew it was the top. I remember him because he had he didn't even work in tech at the time. So I was like, why are you into, you don't even know what this is? And he was just like, nope, 240s. I'm going to buy it before it goes to the moon. And I'm like, all right, bro. And he's been bag holding that one a lot. Let's transition to Tesla and talk about Mr. Dan Ives, who went on a pretty bearish show yesterday around this company, exclaiming why Tesla will grow 50% and be $310. That's his new price target by next year.
Out of 4 of our traders tonight are negative on Magnificent 7. Does it go to 50? I mean, like, where do you start?
I mean, I think 6 to 9 months from now, the stock has a 3 in front of it. I think it's back to above 300 as ultimately, I believe this is more of an air pocket that we're seeing from a growth perspective. I think margins start to trough out. And going into next year, I think numbers conservative. And the sum of the parts, as Dan talked about, I think when you look at battery technology, FSD, autonomous, I could argue it's probably one of the best AI plays out there. To me, this is more of a table pounder opportunity rather than time to hide in the cave.
Can it grow? Can it gain market share? Can it achieve scale if China is weak? If there are issues in China? I mean, if Li Auto is really, I mean, it had a very good quarter. It reached 100,000 units. That's the point when Tesla started making it work, 100,000 units. And it's at that critical mark now. So maybe it's poised to sort of, really win the market there. Yeah, look,
you raise great points. Moses, obviously raised great points. I mean, I just got back from Asia. I was there for 2 weeks. I mean, in my opinion, the China story, the cuts they've done, that's the strategic poker move they needed to do. No doubt, demand softened, but I do believe we're starting to see some equilibrium where I look out into next year, you look at 2.3, 2.4 million units, 40, 50% of that needs to come from China. So to your point, no doubt, China is the hearts and lungs of the Tesla growth story, but it goes back to, look, the bears have hated this. You go back 5 years ago, 3 years ago, and I get it. They view it as an auto company, as Danny talks about. I view it, and I've always viewed it as a disruptive technology company, which is why I view the sell-off here and a lot of the hate as more the opportunity to own it rather than the time that there's some sort of, fire in a crowd theater.
No hate here, all love. But you know what? I think Elon Musk doesn't love the fact that interest rates have been going higher. He made a point of talking about it at length a couple of weeks ago. How important is the bond market to the Tesla bull story? I mean, look, Musk called it out. And then again, it goes back like that was a disaster conference call. We talked about that, just the way that was handled. Yeah, of course, it's very important because the price cuts, essentially nothing even happens to that relative to the consumer. And I think as Nathan's talked about, ultimately, you need to see that come down. You need to see the China story stabilize. You have a lot of competitors come from all different angles. But if you look at Lucid and others, it's very hard to scale. And I think it just continues to come down. It is still Tesla's world and everyone else is paying rent in electric vehicles.
So who agrees with Dan? I mean, he went on he was the lone bull on that panel arguing for why Tesla's going to be fine. This new $300 price target, 310, I think is the price target he has in the next 12 months. Right now, the stock's at 200. What is the stock? The stock fell pretty badly yesterday. We've got 5 minutes into the market open, folks. Thank you all for being here. Stock's at, wow, 209. So it was at 220. So it fell, fell 5.46% yesterday. So now we're at $209 on Tesla. I think it's so easy to be bullish on Tesla and like end up looking right. And that's why I think Dan is continuing to be bullish. I mean, he's been bullish for a long time. You don't want to bet against Elon, even though Tesla might have some short-term headwinds with interest rates and credit and obviously auto prices going a little bit higher than they could be. Tesla is going to be fine, bro. It's Tesla. By the way, the new Elon interview dropped with Lex yesterday. I didn't get to watch all of it. I put a little bit on the background while I was working. And, Elon was just talking about how they asked Grok, what has Elon gotten wrong a bunch of times just for fun? And Grok, which is Elon's like ChatGPT competitor, he was like, Elon has promised, full self-driving, but has failed on that promise many times. And Elon just looked at Lex and he was like, sometimes I'm late to my promises, but I always deliver. And it's one of those things where it's like, that is true. Elon has always delivered. When it comes down to game time, the Cybertruck's going to be out at the end of this year. He delivers. He gets the job done. I mean, Tesla's up a lot. If you were even in 2019, it's up a lot. So from that perspective, I think it's very easy to be bullish on Tesla. I think the other argument he made here in regards to Lucid earnings is like we talked about that on Tuesday. So Lucid earnings were disgusting. I mean, these guys delivered like 7 cars. Like it's insane. They're not and they're backed by the Saudis and they can't, sell their cars. Li Auto, BYD, these are not bad companies, but they're nothing in the realm of Tesla, especially nothing in the realm of Tesla's gross automotive margins, which are coming down, but are still better than the entire industry. The auto worker strikes are finally concluding, and now maybe they'll be able to pay their workers. Like there are so many problems with the legacy auto markets, even if Tesla's interest rates in general are hurting Tesla in the short term, which I've been very public. Like that's not good for Tesla. We all know it's not good for buying $35,000, $40,000 EVs. It's still not something long-term, which I think what Dan is projecting going to be, the worst thing in the world for Tesla, because at the end of the day, the good companies are going to win. Tesla's the good company. So we'll see what ends up happening with Tesla. Rivian is interesting. 2 minutes until the market opens. Let's see where Rivian is at. Rivian ended up having a good earnings. Rivian right now, $15.45, up 0.78%. Where's Lucid? Lucid fell below 4 yesterday for the first time in a while. Yeah, look at that. $3. This is a 52-week low. 52-week low, $3.72 on Lucid. So now the market cap's $8.6 billion. This is incredible. Who are the institutional investors of Lucid? Does anyone do any names? Do you guys know them on the top of your head? Who actually owns this stock? Like which institutions are like gung and ho about supporting this company outside of the Saudi PLF? Because outside of the Saudis, I actually don't know any American companies that are super into that. Harry says, I saw Cybertruck in person and it looks fabulous. Yeah, and people are going to buy it when it comes out. They're going to buy the Cybertruck. Tesla doesn't have a demand problem. They have a problem of interest rates and having to lower prices in order to make them more affordable, but I don't think they necessarily have the biggest demand problem when they release their new products. We got about 40 seconds until the market opens. Let's see what happens. What I'm looking for today, updates on Sofi and Robinhood. Sofi CEO had to buy some shares just to get the market and for me to shut up yesterday. Let's see how the market treats them. Robinhood fell below $8 yesterday. Let's see if it continues to do that. Friday is traditionally a day where the market sells off. However, the market is kind of sold off this week in different sectors, even though overall it's been up. So it's kind of confused, does the market, because when the market's good the whole week, it sells off on Friday. When the market's bad the whole week, it goes up on Friday. So we'll see, given we had a lot of sectors that were up, some sectors that were down, what is going to happen to the stock market today. And we will end up seeing. 10 seconds until the market opens. Kathy Wood bought another 382,000 shares of DNA. It's just becoming incredible. We'll see how the market treats it there. Thank you, 670 people, for being here. Today is another day, November 10th, 2023. Another Friday. The stock market is once again open. Wake your ass up. Here we go. It's time to see what's going on in the world of the stock market. Robinhood opens up above $8. So it's at least we're not down below $8 anymore. Robinhood right now at never mind. I spoke too soon. We got to $7.99. Robinhood now $8, up 0.88%, or 0.88%. of%. Tesla, $209. Rivian, $15.34. Lucid, $3.69, down 1.6%. CleanSpark is up a little bit. Marathon is up. Riot is up. Coinbase is up. And that is because Bitcoin is up. Bitcoin falling a little bit low, 37,000, but 36,985. NASDAQ opens at 13,559, basically unchanged, up 0.28%, up 37 points. S&P up 0.40%, 435. Not bad at all for the S&P. Fell to 433 yesterday. Unity down 10% on earnings. Unity is not doing that well. We talked about Unity, but it is down. And so as a result of that, we're going to see if either the market buys the dip or the market continues to let it keep going down. Market cap of $8.7 billion. They are growing revenue at 69% year over year. Robinhood now above $8, up 4 cents, $8.04. SoFi, $6.88. SoFi basically flat, opens at 0.37% up on the day. We'll see if the market takes it a little bit lower from here, but it's not really green, not really red. It's just kind of stuck there and toying with all of our emotions. TFC, 29.24, up 0.31%. Bank of America, JP Morgan are up. Palantir, 18.25, down just a little bit. Now it's green, 18.30, up 0.4%. Again, two things Palantir had to overcome this week. Number one, Palantir had to overcome Jim Cramer saying that he is Mr. Palantir. That was a big thing to overcome. And quite frankly, Jim Cramer didn't do shit to Palantir. I mean, like, Palantir is just holding heavy and strong at 18. Like, it's just doing a great job with this price action. So Jim Cramer, I mean, again, I said this a couple weeks ago. I mean, a couple days ago, if we can overcome Jim Cramer, we can overcome anything. Like, the entire world is ours to conquer if we can overcome Jim Cramer. And second of all, it's been stuck in this range for a long time. I mean, it's almost been 3 weeks stuck in this $18 range, which if we end the year at 18, I think all of us should be happy, because having this range and become a base and a real bottom and a real level of support for Palantir allows people to be more excited to buy it at 18. I think a lot of people are afraid that it's way overvalued. It's coming back down to 14, 15. So we don't see as much buy pressure. But if it consolidates at this level, then maybe we do see that buy pressure. MicroStrategy, 504, it's up 2%. Uber, $50, up a little bit right now. Adobe, 578. This one's doing phenomenal as well. Microsoft, 362, still close to those 52-week highs. We're at 366. PayPal, of course, is down. Why wouldn't PayPal be down? Datadog continuing to do good from their earnings, 101. Enphase, $74.24. Enphase up 2%. The sad thing about Enphase now 73 is that it's really dead money until it's really dead money until interest rates come down. Like, there's just no catalyst to see Enphase come up. And so interest rates are not going to come down at minimum until May of 2024. And even May is being a little optimistic here. So, yeah, we'll see. We will freaking see what happens with Enphase. But as of now, it's probably not the maybe it's a stock you want to be in long term, but it's definitely not a stock for the short term to be able to benefit from. Netflix, 437.55, Airbnb, 116, Celsius, 175 off their earnings. They are still pretty much flat. Hims also is up just a little bit off their earnings, 671. I think this was the last big week of earnings. Like, next week, I think we have a couple of companies, but this week with Uber and all those other guys, this was the last big week. Let's go to AMC. They had earnings, and I didn't even look at them. AMC is down 5%, $8.25 cents on the day. I think they had like a couple of reverse splits, right? Because AMC was $54 July 2023. Yeah, they had to have a reverse split to get down to this 822 level, I would imagine. I wonder if the AMC ecosystem of those apes are still as big as it was. Because I know Trey Trades, who was the big YouTuber who covered AMC, he left like 7 months ago. He was done. He was like, I'm out. I'm done. And so the cult leader kind of disappeared. So I wonder if there's people still really making AMC content. I haven't seen a lot of it, but AMC down 5%. Amazon 141, Google 131, Verizon is up 35.68, Intel 38.33 as well. Apple again 184. Apple's getting close to 190, 2.86 trillion. We saw it go to 197 in the summer when they announced the Vision Pro. It seems like the market momentum has shifted a little bit. Apple was at 164 just a couple of days ago. It is 184 now. So Apple is definitely continuing to get a little bit more love from the market. Meta 321, Meta getting some love as well. Spotify 169, Snapchat 11. Snapchat also getting some love, right? The stock was stuck at $8. Now it's at 11. ARK Innovation at 38.98. I think Coinbase is number 2 in ARK's innovation fund, so they should be getting some green from Coinbase, doing really well over the past week and over the past month. Robinhood, again, they bought 1 million shares of that one. They're waiting for that to come back, but they're buying the dip there. And S&P at 435. DNA, again, their earnings were trash. Kathy Wood, I think she bought like 800,000 shares this week, which is basically $900,000, right? If you multiply it by the share price, or close to $1 million. Again, this is one of those companies that's either going to make her super rich, or it's one of those companies that's going to be a big mistake that like she just kept piling into and tried to get something out of, even though she couldn't get a lot out of it. I like Ginkgo. I like their business model a lot. I just think it's going to take a lot of time for them to move on. Let's move on to a little bit of macro. And then I want to transition to Ron Barron, who was on CNBC, and he talked about Tesla. So we're going to do one quick macro thing, and then we're going to talk about Tesla. And this macro is a little bit geopolitical as it is macro, which is Biden is meeting Xi Jinping. I don't even know how to say his name. In San Francisco. China's coming to Joe Biden. China's coming to the United States. This is interesting. When I saw this headline, Biden is meeting President Xi on Wednesday next week in San Francisco. It is expected to cover global issues from the Israel-Hamas war to Russia's invasion of Ukraine, North Korea's ties to Russia, Taiwan, the Indo-Pacific, human rights, fentanyl, AI, as well as fair trade and economic relations. Sources say nothing will be held back. Everything is on the table, according to U.S. officials who declined to be named. We're clear-eyed about this. We know efforts to shape or reform China over several decades have failed, but we expect China to be around and to be a major player on the world stage for the rest of our lifetimes. The reason this is so interesting is because on the Republican debate a couple of days ago, they were asked, this was actually Thursday night. Yeah, they were asked, what is your stance on China? And Vivek, who I think had a pretty decent, performance, he called out Nikki Haley's daughter for using TikTok because Nikki Haley was like, Vivek, why are you on TikTok? Because it's a Chinese app. And, you say you're against China. And Vivek's like, yeah, but I like marketing. And so even though I'm against China, I need to be able to market myself, and TikTok is where the new generation is at. By the way, Nikki Haley, your daughter's on TikTok. So if you're so against me on TikTok, maybe you should take care of your own family. And I thought that was a pretty mic drop moment. I mean, that was like, holy crap. Did he really say that? And so Nikki Haley gets super defensive, yada, yada. But nonetheless, I mean, there are a lot of tensions going on with China. Biden and Xi have known each other for more than a decade and shared hours of conversations over 6 interactions since Biden became president. But both men come to the table with mutual suspicion, grievances, and garbled impressions of what the other is seeking. A lot of issues are going on with China right now in regards to fentanyl, Taiwan potential invasion, their support of Russia, their support of, the Palestinians, even though the United States is supporting Israel. I mean, there's just so much stuff going on in different areas that I don't really think this meeting is going to be productive, because these types of meetings are never productive. I mean, what are they going to uncover in this meeting over a couple of hours that are going to make anything different? But it is a meeting that's going to happen, and it should affect some of the stock market and some of the companies in the stock market. Let's check on Alibaba. I feel like we haven't checked this in weeks. Alibaba, $82.48. Basically stuck in this $80, $78, $80 range. It was at $58 October 2022, so you're up on it if you bought it October 2022. But I know it ran up to 100 at one point, 108 in July of 2023 when the market ran down, now at $82 as well. Not too much big news on Alibaba, but it is in this range right now. Robinhood, 810, Palantir, 1858, going up 2%, S&P 435, and Sofi, of course, down 1%, because why not? Why wouldn't Sofi be down 1%? All right, let's get Ron Barron, legendary investor. He was on CNBC today. Let's see his thoughts on the recent Tesla decline, where he thinks the market's going, and overall how he sees Tesla's future.
As we always do, but then I want to sort of broaden it out and talk about the markets and some of the other companies that you're invested in. There was an analyst call just yesterday. This is HSBC, which really initiated coverage. They said that their price target was $146. I assume you probably looked at this. And
I also forgot to mention that is the reason Tesla went down 5%, because HSBC issued a really steep price target decline. So that's another reason why Tesla stock was down yesterday.
And probably laughed, given your very bullish views on Tesla. But what was so interesting about the report was that they really were trying to define the company as an EV automobile maker. Is that the way you think about this company?
I think about it as a technology company that's providing services to their own company and to others. They can't possibly be matched by anyone else. They have data, technology. They make cars cheaper than anyone else. When Ford makes one of these cars, an electric car, every car they make, they lose $36,000 on. $36,000 per car. Our company now makes about $8,000 or $9,000 in profit a car. They were making $15,000 in profit a car. But if they build a plant that costs $7 billion for 1 million cars, that plant was making $15 million a year, $15 billion a year on a $7 billion investment. $15 billion on a $7 billion investment. An ordinary industrial company would make 15% on capital, 20% the most. This guy's making his capital twice a year. Now he's making it once a year. He's making $8 billion in a $7 billion plant. So he's the lowest cost person. Everything about the business is trying to drive prices lower. Right now, they will be in a very, in the 1900s, early 1900s, the automobile companies were tremendous innovators. No longer is the case. In the 1950s, they decided they were going to go for profitability, and they outsourced all of their supply chain to their detriment. And all these companies went bankrupt. Hundreds of them went bankrupt. And now the way we're going is that their electric cars, they drive, I guess they have about 30 miles a day, 30 or 40 miles a day, and they have 3 million of them that are collecting data. 100 million miles a day they're getting for data. And then they're also getting compute that they're going to have more compute than anyone in the world in 18 months to train it.
Have you been surprised, and this is true of the other EV makers, a lot of EV makers have put up big goals in terms of sales, and then they've scaled those goals back, saying there's just not the customer demand. Do you think that is the responsibility or a function of the products that these other automakers are putting out? Or do you think that there actually isn't the demand for EVs writ large that maybe was anticipated or expected?
There's 1.5 billion cars that have to get replaced. They do about 80 million cars a year, and a small percentage of those, 10%, are electric right now. Ultimately, it's going to be all electric. But the reason there's not more demand is the cars that are out there are not very attractive by the dealers, by the car companies, and they're expensive, number two. And then in addition to that, the dealers who sell them, they don't want to sell them because there's nothing to service. The dealers make all their money on servicing. So dealers sell them, they're not selling them.
Talked about trying to bring prices down, and that's something that Elon Musk has talked a lot about. At the same time that he's going to try to bring prices down, you have the potential for Tesla to become a target of the UAW, which of course just made this new deal with the other big automakers at meaningfully higher prices in terms of what those employees are going to be getting. What do you think about that?
I think Tesla's employees are the highest paid workers in the world as far as the automobile companies go, because they own stock.
As a function of the stock.
And that stock option would not be present in all instances if it were a unionized company. When the unions were in control of Fremont, as soon as they had trouble, they ran from it. Tesla took over that plant in Fremont after the unions had left, after the company had gone bankrupt. Tesla employees, there's a good story that one of the executives of, and then I want to talk about other.
Yeah, no, of course.
One of the executives who devised the pay plan for the employees was telling me that he's a small Jewish guy like me, and he was walking through a plant, and a large black man walks over to him, shaved head, tattoos all over the place, and says, Ira, are you the man who devised the pay plan for us? And he said, yes. He said, I want you to know that I'm the first man in my family, the first person in my family to ever be able to afford a home. And thank you very much. And so the workers there make more than anyone else by far, and their health care, all the benefits are better. The unions have been trying to organize Tesla, Toyota, all the foreign companies for years. They failed repeatedly. Why? Because those companies are not, the union's not in business to keep the employees. Their unions have the power.
Before we move off Tesla, just for
by the way, the stock went down yesterday, not because of that report.
Okay, what do you think it is?
Because of Joe Biden, President Biden, who, by the way, I love what he's doing for Israel, but I don't like that much what he's doing in business. Some things I like, but he's the one who said unions should organize Tesla. That's what happened yesterday when the stock went down.
Okay, we'll come back to the Biden piece in just a second. Melissa Lee, I think, has a quick Tesla question because I know I want to talk to you about a whole bunch of other things. Melissa?
Yeah, Ron, thanks for taking my question. When you think about China, how do you think about the growth there? Because that's a key piece to the Tesla story. Li Auto reported its earnings yesterday and had strong EV guidance. It's gaining market share. I'm just wondering how you think about the competition, but also the weakening Chinese consumer. And have you discounted that portion of the Tesla story at all, given the Chinese economic forecasts out there?
Tesla right now is doing about 1.8 million cars a year. When we started investing in the company 7 years ago, when we invested between 2014 and 2016, they were doing 41,000 cars a year. So 41,000 cars a year to 1.8 million, they're on their way to 20 million cars. China is about 1 million right now of their 2.8 million. But a large percentage of what they make in China is exported from China to Europe. And the more they build in Europe, of course, the more they're going to save on transportation costs and duties. The idea is that China invited Musk in, and invited him in because the Chinese car companies have done very poorly for a long time. And the promise was that he's going to help them become better car manufacturers and he's not trying to take over the market in China, better car manufacturers and develop a local supply chain. And so he's the only one that's ever been invited into China that's been able to not have a partner, a local partner, to operate their business. So I'm convinced that they have good operations in China. The person who runs their Chinese business, the Tesla business in Austin, in fact, is probably in line to be important person at Tesla overall. He's Chinese, and he was brought from China to Texas and runs the business there. He's going to be in charge of all the automobile business. So I think the relations they have with China are exceptionally good. Both people are getting something from it. And I think that business will continue to grow, but he's going to open plants all around the world for low cost cars. And wait till you see what's going to happen when all of a sudden they start selling cars instead of for $40,000 a piece for $25,000 a piece, which is going to happen in about a year and a half.
You know, I tend to agree with Ron. I mean, look, I think he's making a lot of sense here. A couple of the things he addressed in this interview that I think were interesting, which is why I let it keep playing, is this idea of Tesla ultimately transitioning from a niche car kind of consumer company to a mass market car company. This is something we've all known is going to happen. Tesla getting that $25,000 car out there is going to be really important when they're competing with Toyota's Corolla and Honda Civic. I mean, I have a Honda Civic. I love my Honda Civic in 2019 that I bought. But if I could get a Tesla for 25 grand, dude, I'm not buying a Honda Civic anymore, right? Things change. So I think, and then here's the simple piece of analysis for why I think Dan Ives is right and Ron Barron is right, and this HSBC price target is stupid. What other car company on the planet can make a $25,000 EV at scale, and then and that which can supply the demand for what that would be? Because we know the demand for something like a $25,000 EV that's a Tesla EV would be just absolutely insane. It's Tesla, right? They're the only company that GM can't do it. Ford can't do it. GM pushing their EV sales back. Ford deciding that they want to refactor how they're going to do EV cars, especially with all the auto worker strikes. It's like Tesla's the only company in the world that can do it. It's just that simple. They're the only company in the world that can do it. And it's not that controversial. If they're the only company in the world that can do it, then damn it, they're going to do it. It's not easy to make electric vehicles. It's not easy to make them at scale. It's not easy to vertically integrate. It's definitely not easy to have the unit economics work to the point where they could be $25,000. That's not easy. So if Tesla makes it easy and they figure it out, as Elon said in the interview yesterday with Lex, he's going to deliver. Even if he's late on some of his promises, he will deliver. Not to mention when FSD officially becomes real, which, you know, it's taken a while for FSD to become real. But when that happens, I think Tesla's going to be fine. So overall, do not think it's the worst situation for Tesla. TJ, the wheel deal. What's up, man? Hope you're doing well. Hope you're doing good. Austin says, Amit, do you think Tesla stock price will stay here or drop a little due to high interest rates over the next year? I think it could absolutely drop if interest rates continue to remain at this level, because at the end of the day, people don't have the money to pay the $800 or $1,100 a month that it costs to finance a Tesla. Nonetheless, we've seen a drop already. We've seen it go from 290 to below 200, right? So could it go lower? Sure. Every stock can go lower, but it's dropped. Like the dip happened. I mean, the dip could happen even more, 100%, but it has happened pretty dramatically. And so the question simply becomes how many more sellers are actually out there that are going to deny the overarching thesis that Ron Barron just laid out for 7 minutes. Amit, have you ever driven a Tesla? Yes, I have. And I was very confused with, like, you don't have to press on the brake, right? As soon as you put your foot off the gas or the pedal, the brake just happens. Like, that was a really confusing part for me. So I have driven it before, but I haven't driven it a lot of times before. But I have had some experience driving it. Cybertruck also projected to not to be big profit for 18 months is big too. Yes, I agree. But again, they're one of the only companies that is getting something like a Cybertruck out there. So I think at the end of the day, all the short-term bearish concerns about Tesla, they're just not enough for me to become bearish on the stock. And, you know, I don't own the stock, but I'm not necessarily bearish on the stock. I don't own the stock because I just have higher conviction in Palantir. That doesn't mean I'm bearish on the company or bearish on the stock. I think the company's going to be fine long-term. I'm like, long-term, they're going to be absolutely fine. But in the short term, there's going to be some headwinds, and it is what it is. If you're long-term Tesla, then you don't have to worry too much. TJ says he has 500,000 SoFi shares and 500 open cash secured puts. That's a lot of SoFi. That's a lot of SoFi. Dude, when SoFi runs, TJ, if SoFi doesn't go bankrupt, which where's SoFi at? 683. All right, so we're at 680. We're not in the 670s anymore. Palantir 1880, folks, up 2.9. This is why Palantir has been very exciting over the past couple of weeks. It's doing well. Robinhood 827, up 4.29%. Not bad at all for Robinhood, getting a little bit more momentum in Palantir in this 1880 range. SoFi is the only one that can't really keep up in this 683 range. But yeah, when SoFi runs, TJ, you're gonna have to invite us to Vegas, and you're paying for everything because you're gonna have a hell of a return when that happens. Persian Prince says, if you've driven a Tesla for at least a week, you'll find a ton of annoying quirks that shouldn't be in a 40K car. I mean, maybe that might be more subjective, Persian Prince, because they sell 1.8 million of these things every year, right? So I guess people are enjoying their Teslas, even though there's probably some annoying quirks, but I guess people get over it when they, are able to engage with the good parts of Tesla. But I wish I had money to buy Tesla long Palantir. Yeah, and again, if you don't have a big Tesla position, but you do have a nice juicy average on Palantir, I think Dan Ives, someone the other day was talking about someone I respect. I'm forgetting their name, but they were saying why Palantir could become the next Tesla. I'm totally forgetting. I consume a lot of Palantir content, so I'm forgetting about this. But they weren't just saying it in a hype way. They were saying it in a more sophisticated way for why this tech within this sector, given the moat and the intellectual property Palantir has and their potential to just explode in regards to the government, there's just so many opportunities for them to have a Tesla-like explosion, even if it's not a Tesla-like return. That, if you're betting on Palantir at 40 billion, maybe it's a little bit better of a bet return-wise than betting at Tesla at 700 billion. That's all. But we will see what happens. We will absolutely see. That's why the next decade is going to be really interesting, because Tesla's an EV ETF, an energy ETF. It's all these things, Palantir, Nato, Western Bat. That's why I think a Palantir Tesla portfolio over the next decade, I don't think it could go that wrong. I think if that's your portfolio, it's going to be okay. And maybe I'm totally wrong. Maybe Palantir Tesla portfolio shits the bed, even if you start at these prices. But I don't know. I think there's a lot of growth built in for those companies. Last story I want to cover before we end out today. Humane's AI pin up close. So this is a new product that launched. This is an AI pin that you can wear on your shirt. It launched yesterday. It is trying to tackle the AI wearables market. You can essentially put it on your shirt, and you can then become a walking being with AI. It replaces the need for a phone. It replaces the need for a camera. You can just work with the pin on your shirt. So I guess I wanted to ask the question, does anyone think you would wear this all day? It's powered by LLMs. It's powered by neural language. You can talk to it. You can ask it for what movie recommendations you want to go to. It's $700. So it's definitely a lot of money. But you're getting a phone number. You're getting an unlimited talk, text, and data. You're getting as many AI queries as you want in addition to all our AI services. Today, we see how much excitement there is around ChatGPT, what people are paying to access already. So the question is for all you guys, would you wear this ever? Okay, immediately we're getting no's. You should be bullied for having this. Dude, it looked kind of cool. It looked kind of cool if you saw the video. It didn't look that crazy. Let me just show you guys in real time. We're not going to play a lot of the video, but just what they look like wearing it. It looked pretty cool, bro. It didn't look that crazy. So this is the video, and these are the people presenting it. So you see how they're wearing it on their they're talking to it right there like that. I know a lot of people are super skeptical. It would be kind of cool. I don't know if it would replace a phone. It definitely the UI, right? So the interface we have in terms of iPhones is we pull it out and then we engage with the phone and we consume content, create stuff, whatever. They're trying to replicate that in a sort of hands-free experience, and I don't really see it. I don't see the vision as deeply, but I guess it's still going to evolve, right? I'm trying to be not skeptical here because these things can change. Look at that. You see how it's displaying the song on the guy's hand? It's displaying a music player on the guy's hand. He can skip or pause the music right through his hand. It's kind of crazy, bro. It's kind of crazy. Some Star Trek shit. Yeah, it's kind of wild. He sees the time on his hand. He doesn't need to take out his phone. My thing is just it doesn't look. You see how he did a gesture with his finger? You see he's doing these gestures. He's getting the weather, the date, all this stuff. My thing is it's not that complicated to just pull out my phone and get all that information. So that's why I don't see the crazy, pain in that, but I guess they're trying to do it in a different way. Will develop skin cancer, but I think it's been tested to not give skin cancer or something like that. Hopefully it doesn't, but you never know. Some people say it looks ugly. Yeah. Well, I wanted to bring that to your guys' attention because we might see more of a market. We know ChatGPT is working with SoftBank potentially. By the way, SoftBank took a $6.2 billion loss on their WeWork investment because WeWork went bankrupt. It would be really funny if Adam Neumann, the guy who made WeWork turn into this huge thing, actually buys back WeWork at these prices because he's worth $1 billion. WeWork's worth $100 million. He could probably buy it back. But SoftBank and OpenAI are potentially working on an AI device wearable in the future. And it might look something like this, or they might end up buying this pins company if this ends up working, right? Because they just incorporate ChatGPT into all of it and it becomes a big thing. So we'll see what happens from there. Last thing for the day, word of the day. Let's get that done. And then we'll be done for this Friday. In 10 years, Apple is going to hop onto this. Yeah, I mean, we got to see what Apple moves on from the iPhone long term. Entre-nous. Entre-nous. Sounds kind of French. Entre-nous. Between ourselves. Confidentiality. Okay, so when Angus shares some personal information regarding his home life, Mr. Human assures him it will remain entre-nous. I like this one. Entre-nous. It's between us. This market open is entre-nous. It's between us. It's us 600 people here. We're the only 600 people on the planet that are within this market open right now. It's very entre-nous, right? It's a very intimate setting. All of us right here talking about the stock market, entre-nous between all of us. The S is silent. Yes, the S is silent. It's very cool. Entre-nous. Okay. Last quick check on the market, and then we're done for the day, folks. Palantir 1885 up 3% on the day. S&P 500 435. Robinhood 820. SoFi 683. Disney 88. Unity 2494. Amazon 141. Apple 184. Microsoft 364. Getting close to those all-time highs. PayPal 5434. Tesla 212. Tesla up from 209, and then Palantir 1884 up 3% on the day. Kelly says it's French. Entre-nous in French literally means between us. Like directly translates. Okay. Well, that's it's between us. That's the word of the day. Entre-nous. That's it for me, everybody. Thank you all for being here. Thank you all for joining the market open this entire week. The numbers have been, pretty amazing. I think we cracked 700, 800 every day. On Monday, we had 940 when the bell rang. So that was really awesome. Thank you all for supporting the market open. It means the absolute world to me. Got a lot of work to get done with this weekend. Finance Junkies will not be today. We'll have Palantir Weekly today. We'll have a lot of Steve just dropped a new article on Palantir. Steve literally, dude, I wanted Steve to go to Vegas with us. He was like, no, I can't take off from work. I'm like, all right, that's fine. Steve texted me yesterday. He's like, I took off from work to finish the Palantir article. And I wanted to just like curse him. I'm like, you took off from work to finish a Seeking Alpha article. And the reason he was texting me this is because he wanted me to retweet it, which I did this morning. But he was like, just make sure you retweet it because I took the whole day off to finish the article. I'm like, all right, bro, you're going to take the day off to come to Vegas, but you have to take the day off to to finish the Palantir article. But nonetheless, he'll be on Palantir Weekly tonight, and he will discuss his Palantir article. I haven't read it yet, but he says I'm going to be very surprised by what he has to say. I think he's going to be really bullish on this article, so we'll be discussing that. Let me actually put it in the chat. He'll probably want me to like share it with you guys. So let me put it in the chat so you guys can read it. And yeah, then we'll keep going from there for Palantir Weekly tonight. And that's it for us. Sunday, we'll be back with Finance Junkies. And then Monday morning, we'll be back on the market open. Have a great week. Enjoy it. Go get some dinner. Have some fun with your family. Go do what you got to do. Recharge. And we'll be back on Monday morning for the market open. Thank you, everybody. Have a great, great day. And I will see you tonight on Palantir Weekly and back on Monday morning. Bye, everyone. Have a good weekend.